But we had the countdown, but I don't see myself. Am I not supposed to talk now?
You never stop talking anyways.
Listen, exactly. We're still working through our technical difficulties, trying different software. There we go. All right, it's official.
It's
We're here.
official.
Jessica Franta, good
Good
morning,
to
good
see you.
afternoon, good
Yeah.
evening. Good to see you.
You're in Florida, right? Coming live from Florida?
I am in Florida. I'm spending the week down here meeting with our investors and also some of the partners, and also looking at some different opportunities for us to continue to expand into what we're doing down in the Florida market as well. So a lot of opportunity down here. It's been a great few days meeting with our current investors and meeting with new prospective investors, and also just talking about the market. We're in Maryland. We're in the Baltimore region of Maryland, starting to do more and more business outside of our immediate. And it's nice to hear about some of the other markets. Florida, for example, very busy, very active, but
Hmm.
also has some potential concerns for people, right? So they're a little bit worried about, is it a little too frothy? Some of the numbers, some of the development is like insane. It's crazy. It's really exciting. But as with anything in real estate, certainly as a lender for what we do, being careful and conservative and trying to really understand and have a comfort level for that ARV, that after repair value, and of course the as is value is so important. So that's really that challenge of trying to understand, what is this piece of property really worth now? Do we think the person is buying it right? And then do we think it'll be worth what they think it'll be worth down the road, depending on if it's a flip situation or a hold situation, how the rent, cash flows, tenants, et cetera, are going to impact it. And that ties to what we were talking about just before this, which is that seller and buyer push pull, right? That's definitely out there in the marketplace. Are you seeing some of that in some of the newsletters and updates in the market?
Yeah, I'm laughing because you just covered an incredible amount of ground in about 30
Mm,
seconds. So yeah, with that with that in mind, lots of news headlines, right? A lot of them I think are quite simply clickbait. They're just meant to, activate engagement or
right.
spark concern or fear. A lot of them, as it relates to Trius lending partners, are not even applicable. So what is occurring in Dallas, Texas, specifically as it relates to large complexes of apartment buildings, slowing rent growth, it just quite simply doesn't affect the mid-Atlantic market, or even, as you're in Florida right now, even some of those markets. So, and then of course, interest rates. So again, now I've just done the same thing as you did and covered a lot of ground in 30 seconds. But I think when you really kind of slow down and take out some of that noise and some of that clickbait, especially as it relates to us, there's actually still a lot of really good things happening. I think, in particular, with the Mid Atlantic market, in particular with single family homes and our focus and growth, and really going back to how you opened it, that tension that still exists between sellers and buyers, it's still a strong market, and we're still seeing good transaction volume for good products that we're helping bring, because, typically when our borrowers are borrowing, they're buying a property, they're fixing it up, and they're bringing it back in a manner that's more conventional, that somebody's going to live in that home. I think there's still a huge demand for that. I don't know. What's your take, kind of?
When you say buyer and seller tension, explain what you mean to everyone who's listening. What are you referring to with that?
Right. So, I mean, what we're seeing, of course, is that inventory has come up, right? So inventory year over year, we came out of this crazy period, especially during COVID, where just it was flying off the market. It was absolute insanity. People are waiving inspections. All of that has slowed down. Homes are on the market longer, and
Right.
buyers have more to choose from. At the same time, we'll definitely year over year appreciation is down. We aren't really seeing sellers cut or negotiate in a very meaningful way.
Right.
I think appreciation itself has slowed, and you might be seeing, listing value to actual sales come down maybe 1 to 2%. But this is not a correction,
Right.
right? This
Right.
is this is just a slowdown in appreciation, really. And so there's kind of a tension. I think there are a lot, and news headlines, again, some of these are applicable.
Yeah.
I think there are a lot of buyers on the sidelines, and again, this is a more conventional standpoint, but they're waiting for interest rates to come down and improve
Yeah.
affordability. So because
Right.
sellers have really stayed at their current prices and buyers, are maxed in some regards. There is that
That's
tension.
that
That's what I
that's
mean.
that's what's called.
Yeah,
So that's exactly it. So the sellers are just not willing to give in on that price. They're like, I'm staying firm, I'm staying strong, it's worth what it's worth, and that's the end of the story.
right.
They're also struggling, obviously, with some of those people that are in those low rates, waiting for the lower rates to incentivize them to be willing to move or not. Yes, the buyers trying to also potentially wait a little bit or just get a good deal. The seller's not willing to give
Mhm.
that good deal. And that is absolutely a thing. It's funny when you say slowdown of appreciation. It's important for everyone to recognize that is not a negative or a decrease in value. It's still appreciating. Property values nationwide in all regions of the country continue to go up. They just may not be going up as quickly as they were going up, which was quicker than they had been going up in many prior years past as a general rule. So seeing, 8, 10, 20% increases, those have slowed, and that's your point. The appreciation has slowed, but you're still seeing appreciation of properties. They are still worth more. So just on the investment side, this is a conversation I have a lot with investors that I meet with all the time, especially in the last 90 days. This stock market is on fire, right? The
Right.
Bitcoin
Yeah.
fluctuation exists, but for the most part, the stock market, other than a few blips here and there with some volatile days, is on fire every single day, is another record, another high. And I sit with a lot of people who have a lot of money in the stock market. And half of them are freaking out. Half of them are like petrified. Are we at the top? The other half are like, we've got a long way to go. And quite frankly, those are the same things that professionals are saying as well. What's nice about our world that we're in, which is obviously something I share with everyone I talk to, is real estate's still real estate. So to your point, it's still appreciating. It's not seeing
Hmm.
the same numbers as the stock market, but we're not anywhere set for any collapse of any kind. I quite frankly don't think in my lifetime again after the '08 crisis, right? So property and real estate is a hard physical asset, and that's what's still amazing about it. And that's what still makes it such a great long-term investment overall. On that interest rate side, um, getting down a little bit, seeing some drops in interest rates, and that does spur activity and spur volume, but still has a six in front of it. I think if we can get to a five handle in front of it, even if it's a
Do you
5.99
really think
on a
we're going to get
30
to a
year,
five though? Like,
yeah, yeah, I do.
when?
I do.
Yeah. Okay.
I think it'll be high fives. I think it might
Okay.
be a buy down. You can get that with a buy down rate now, right? If you pay whatever
Sure.
a point or
Right.
whatever it is. I'm not. We're not. Just for clarification, we're not in the residential world, but obviously it all impacts the entire real estate side of things. We're only doing the investment properties, but it all ties together. We're in the low sixes. I think there's a good chance. Well, it all depends on this Fed action, right? And the broader
Hmm.
market and a number of indicators. The Fed is not directly tied to mortgage rates. There's other indicators as well. But I think there's a shot of getting to a high five, not a mid five or low five, a high five, 5.75, 5.875, that kind of thing. So it's just underneath that. I think will be a mental sort of barrier that will spur a lot of activity, some refinance activity and some purchase and sell activity, which will ultimately spur and impact what we're talking about here, which is the real estate investor market. So that helps everyone overall. When you're working with someone like us, you're working on getting the short-term loan, the 6, 9, or 12-month short-term loan. You pay a premium for that. You're quick in, you're quick out for a fix and flip, fix and hold, or a bridge loan. The question is what happens after that. So the impact and knowledge to be able to know that when I refi out on this rental that I plan on holding and building my portfolio, if instead of those rates being in the high or mid sevens, if they can be in the sixes as a 30-year DSCR, those are those investment
Hmm.
property 30-year loans, if those can have a six, and just step aside for a second, if residential real estate's in the high fives, the DSCR loans will be in the mid to high sixes, where it's a higher
Right.
loan product. It's a higher rated loan product. So if those can get into the mid sixes, high sixes, I think that would also help. So that's that trickle effect of all those interest rates affecting all the areas of the investment world. So investors would come back and be like, all right, now this cash flow on this property makes sense. With that
Yep.
lower rate on the 30-year fix, I can cash flow better on the rent. And that's really an important aspect of it. Listen, the housing shortage is real. The housing shortage continues. We've been talking about it for years, and we will continue to talk about it for years because we simply, as a country, can't and aren't building enough homes to keep up with what we need. And so that's always a good sign for the investors building homes, renovating homes, renting homes, et cetera. So all those factors kicking in. But what breaks that buyer and seller stalemate? So it's on the residential side, but again, it's on the investor side too. We run into it all the time,
Right.
right? The investor is selling that place. They've had a rental for years. They're taking some money off the table, or the family inherited it, or whatever. Or they're just in the flipping game, and they need the number to be X, and they're just not willing to settle for that to be any lower. And the buyer's like, I'm only paying what I'm paying. The rates are up. I'm willing to do it, but you're going to have to help me out here. And that's this constant struggle that slows the volume and activity overall. And then ultimately has that trickle effect of the entire sort of real estate economy, right?
Yeah. Yeah. I was just thinking, there's that saying, the best time to buy a property was yesterday and the second best time is today. I mean, it's one of those classic stories where in that tension and that struggle that you were just describing is an incredible amount of opportunity because, from an investor perspective, if you can negotiate that good deal, your debt service coverage ratio loans, those
Right.
DSCR loans, to your
Right.
point, they are humming, they are working, and also if you can kind of plan it right, you're going to have a great exit strategy there. And when those rates come down, your competition is going to increase, and competition is one of the most constant parts of the investor story. Is kind of trying to meet both what the seller is asking, but those numbers that work. And so, I actually feel like it might feel like a very difficult time, but it's probably the best opportunity because as soon as they go to those high fives and then therefore correspondingly the lower sixes for DSCR, it's volume is going to go up, but so is
Yeah.
competition.
Yeah.
Um,
And
so
listen, the smart money and the long-term sort of real estate investors that are committed to real estate being a passionate thing for them, right? A long-term sort of part of their investment portfolio, part of their life and their future planning. They always look for sort of timed opportunities. Now, I could argue, I would argue that you don't want to time that. You don't want to time the stock market. You don't want to time real estate either. And to your point, Jess, yesterday was a good day to buy. Yesterday was a better day. Today's a better day. Whatever. Like
yeah.
they're all great times to buy. And so that's again a question that comes up with all of our clients, with all of our investors, everyone we work with, and everyone we talk to all the time is when's the time? Anytime's the time, yes. But even more importantly, like this is a great time to buy. I truly believe that with where we are in the market. I think that hard real estate asset is so important to have in your portfolio. And getting into the real estate game, as we always say, sooner is always better because the key in real estate is time, right? It's all
Hmm.
about time. It's all about that growth of the value over time, the growth of the cash flow over time with the rent continuing to appreciate, the growth of the mortgage payment, the mortgage balance coming down over time. So those are all the benefit the time affords a real estate investor to get into it earlier. And I've said this many times. Start early, start young. I don't have many regrets in my life at all. That's definitely one of them. It might be one of the only ones, to be honest, is, we've talked about this. I know in the office, we've all talked about this. If when you graduated college or started in the working world, whatever your journey was, if you started buying real estate then at whatever level you were able to, do that math. There's no way that math is not amazing when you put it on a piece of paper or on the spreadsheet, right? No matter what your age is, right? I mean, it's just like, wow, I'd be up this percent on the value and my mortgage would be paid off by now. Like, I'm unfortunately an old man. And so I've been out of college for a long time. So, 30 years, I would have paid off mortgages. I'd have tons of free and clear properties that I would have been cash flowing for all these years. Like, that's amazing, right?
Yeah.
And I'm in real estate now. We have a lot of properties now, but we were late to getting there. We were late to the game, and that's really a legitimate challenge. And so earlier is better, sooner is better. There's no bad time. It's always a good time because time will make it work out well, no matter what, over that long trajectory. And if we're in an interest rate environment which is declining, don't wait for the decline because you never know where it's going to hit or when it's going to hit. It's heading in the right direction. Start working on it now. We all can agree that we're not seeing the threes and fours that we saw before. 3% or 4% rates is what I'm referring to. That's not going to happen again anytime soon. I don't think that'll happen in my lifetime again. But again, seeing something in the mid to high five is very, very reasonable. And on a historical context, over say the 50-year time horizon, I run into people all the time. Some of our investors are a bit older than me, and they talk about buying their home at a 12, 13, or 14% interest rate for a personal
Right.
home mortgage, right? Those are the
Right.
80s, right? So
Yep. My parents
that's
talk about
out
it as
there.
well. Yeah.
Right? Like that's like that
Hmm.
memory, and you sit there and you say to yourself, "Are you out of your mind? Like who would ever pay that?" Like today, you'd be laughed out of the room for doing a
Right.
30-year fixed at that kind of a rate, right? Those are private lending, short-term bridge loan rates, right? So it's like really fascinating to hear that. Do I think that's coming back? No, but don't feel that a 5 or 6 is bad either, right? And so that
Right.
timing is really important. Yeah.
So, yeah, so this is interesting. So, as it relates to kind of current state of the market, and we've been talking, I'm really focused on, rates and just kind of the tensions between current inventory, buyers and sellers and everything. But let's, common question we get, and one I kind of want to hear your opinion on, Josh, because you have great conversations with all sorts of industry leaders. I'm probably the Trius team nerd, but you get to be in the room. So I want to hear your opinion. And let's actually talk product type. So, and what I mean by that is, again, kind of going back to we've come out of this COVID period, we'll call it that. And what you'd seen was a huge rise in popularity. Second homes, Airbnb,
Yeah.
Airbnbs really
Yeah.
took off, and that was definitely a commercial product. And then you kind of saw that come into shorter midterm, maybe even like homes where, traveling nurses, that had really taken off as a product. I know you and I have seen and kind of talked about some rise in some other kind of products. People have, approached even tri-sending partners, long-term care, healthcare facilities, mental health, physical health care facilities. What are your thoughts on kind of where all of that is headed and maybe opportunities for growth as it relates for investors?
Yeah, a ton of information there. We could literally do probably an hour a webinar on every
Right.
single one of the things you just mentioned. So I'll try to touch on some of it. Starting off with the second home potentially being converted into maybe an
Right.
investment property or trying to get some cash flow out of it. Definitely something. It's funny. I literally was with someone last night who is doing that with their second home. They have turned it into a rental.
Interesting.
I
Long-term
was,
or short-term?
it's so fun. So it was just like they're like, yeah, and so great rate on that property, right? And so they
Uh-huh.
want to keep that great rate. They have a like 2.9 or some crazy rate,
Oh,
and
wow.
so they're like, we're going to keep it as a rental, and we're going to hold on to it, and it's just a great fit for them to do that. So I definitely think that's something people are interested in doing. I think that interest rate does impact that decision a lot as well. And then just those lifestyle changes as you get older and decide, can you afford it anymore, depending on the cost of college and all the expenses as your kids get older. And maybe after the kids go to college, maybe you're looking to not have that house, maybe have another house if you are lucky enough to afford something like that. So those are some of the factors there. Tying that into that Airbnb conversation, and even the traveling nurse kind of thing. We saw a lot of that, in our region, in the Baltimore, sort of greater Baltimore, Maryland region, a lot of hospitals. And so there was a lot of those sort of traveling nurses. And obviously during COVID,
Hmm.
that was a big thing nationally as well. And so there were investors doing that. Airbnbs obviously got really popular during COVID as well. Everyone was traveling and doing those. As with any sort of hot trend, right? It sort of spikes, right? Everyone jumps on a bandwagon. It's super popular, it's super cool, it's super trendy, tons of interesting loan products come out. And then, as what also generally happens, is it sort of levels out and sort of comes back to earth. So that's definitely what's happened, I think, in both of those areas, both of those niches. There's still people doing the Airbnb, still people buying for it. Much more selective, and the traveling nurse side, much more selective, much more careful on location, location, location. How does turnover impact that math, right? No one's really thinking
Right.
about the turnover of properties and how that cost is a real cost. There's real wear and tear when you have people moving in and out of your house every week on an Airbnb or every long weekend, or a nurse that's in it for only 30 days at a time. There's cost, depending on how good you are, there's potential loss of cash flow as well in that period of having to clean it, straighten it, and get it ready for the next person. But really, that wear and
Regulatory
tear, yeah,
Sorry,
is
regulatory oversight, I think, has been a really interesting part of
correct.
the Airbnb short-term, midterm rental story, right? So it
the
had been,
cities the, the cities crack down. Yep,
yeah, as
for
it
sure.
went from being kind of an emerging market, for
Yeah,
lack of a better term, to something
yeah,
more standardized, and cities caught up. I mean, competitors in the form of hotels really kind of entered the game and trying to get
yeah,
legislation. And I think that has impacted, so if, we had a borrower and that's their plan, you'd want to make sure that they've really looked into the regulatory oversight and compliance
yeah.
requirements in whatever area they are, and they vary so
And
greatly.
and
Hmm.
and, and I think the other thing which ties to that too is, Our approach is always conservative to the market, to the economy, to loans, to interest rates, just to everything. We always want to be on the conservative side of things. And so taking a conservative approach with a short-term type of rental product is what could happen, what would happen, how would your cash flow look if you weren't able to have that short-term cash flow, right? So your dollars are bigger on the short-term cash flow. So if you're renting something weekly, you're going to make more on the 4 weeks you have it than you would on just a monthly renter, right? That's the math on it.
Hmm.
That's why it's so amazing. But if you're not filling it up as much, or if the whole plan goes to hell, excuse my language, or if or if legislation impacts your ability to do that as well, wait, that's a big issue. So hold on, will this cash flow as a standalone regular rental, right? If we look
Right.
at an annual lease and what the market rate would be for that, let's factor that into the cash flow and the debt service coverage of that. Does it make sense there? If it makes sense there, it's going to be phenomenal if you can do your plan on Airbnb or short-term rentals. But let's make sure a worst case scenario. And again, that's a mindset that a Trius we do. I do that in my life. I know you do too, Jess.
Hmm.
Conservative, safe, smart, worst case scenario. How can this go wrong? I hope it's going to go through the roof and I'm going to make gazillions of dollars. But if it doesn't, can I really like be safe, be okay, and at least break even and maybe make a little money? So that's a factor there too. The final aspect you brought up is sort of that senior living stuff, which is a major growth area. Also, was with someone at lunch the other day who was talking about that. I mean, when you look at the demographics, the numbers are staggering. The ages, as people are getting older, people are living longer, p- much, much longer. And that trend is only projected to continue at a crazy, amazing rate. That means more sickness as you're getting older, needing more care, wanting to move into other places, not wanting to have your own home to care for. The old aging in place and being able to stay in your home and ultimately have your final days in your home. There's a sector or segment of people that still want that. And I totally appreciate and respect that. But there's definitely a segment of people who are like, I want nothing to do with that. I want to go into maybe a stepped up care type of place, or maybe its own place that has someone to help me out, someone to look after me. And families, certainly people say my age, right? Who my peers whose parents are getting older, a lot of them are looking at different opportunities for where to place them, how to afford to do that, et cetera. So that area of the real estate market is very active, very busy. There's a lot of potential there. There's a lot of big national players doing humongous
Yeah.
opportunities and projects. And then we see it on the smaller side where the person will buy a sort of an older single family place that was a 10 bedroom, really an estate, a mansion, like a beautiful place. And then they'll turn it into one of those sort of care facilities. You have to get the proper licensing, the proper approvals, and hire the proper caregivers. And obviously, it's important to do that the right way and follow all the regulatory and legal side of things. But when done right, it's a very profitable venture. And so that's something
Hmm.
definitely we see a lot of people doing as well, no doubt.
I think one other area of that could be is really exciting and can really impact the growth for at the individual investor level. To your point, kind of especially as it relates to rehab care or something. There's obviously some pretty large entities investing in that as well. But as municipalities and state government. So, for example, I'm based out of Washington State. They've changed legislation as it relates to density and density dwelling at the
Right,
state level.
right.
Allowing for accessory dwelling units or detached accessory,
Yep.
ADUs or DADUs across all cities. Essentially, trying to kind of lessen some of the
Hmm.
impact of the NIMBY population. And I think that really is going to be a path of growth for investors finding properties that either can be relatively easily converted from one unit maybe into two. You add a back entrance, maybe you have a
Yeah.
basement that you retrofit, but it had plumbing so you can add the bathroom. And again, you've got to do everything in accordance with permitting and laws and everything, but you add
Right.
that unit. Or does it have space to actually build another unit? What are those setbacks? Is it 3 feet, 4 feet? What are the parking requirements? But I think for those investors willing to really get into it and learn what's required, there's so much opportunity. I think states that have density issues, so this really impacts West Coast, East Coast for sure, Mid
Yes.
Atlantic region for
Yep.
sure. I
Yep.
think there's going to be a lot of opportunity for investors there for sure.
Yeah, I think that's definitely a growth area, and I think that ties to that, right? That shortage of housing. It's like trying to find
Right.
where can we put people, place people, rent, whatever opportunities you can come up with. I think it's really important to try to think about and think outside the box with. I think a lot of states, cities, counties, et cetera, are looking at trying to be creative with as well. The other thing we're seeing a good bit of in our market, again, you referenced COVID. And there was talk of like, with the internet and is retail dead? And retail is far from dead. Obviously, the shopping
Mhm.
malls are dead, right? That's been converted to pickleball courts or whatever it is. But generally
You're
speaking,
just in Florida right
strip
now, so you're
centers,
playing pickleball.
yeah,
Yeah.
it's in my head, pickleball. But strip centers are huge, right? Strip centers, and some of the mixed use stuff. So we're seeing some more of the market go in those directions as well. We're doing more of those loans as well. Um, Strip centers for some of the national chains, the sub shops, the Jersey Mikes, and the coffee shops and the bakeries and different types of things like that. That's a really attractive investment for people as well. They seem to be performing incredibly well. Some mixed use things as well are really enticing as well because you have that
Mhm.
mix, right? You have that retail below, might be a restaurant, might be a bar, might be a shop and a restaurant, whatever it might be, and then rentals, residential rentals, for tenants on top. Nice to have that balance, right? And that's
Mhm.
not something that's insurmountable for I wouldn't say for a brand new investor, but for like a somewhat still new investor, that's not an insurmountable thing at all. That's doable, depending on what market you're in. That's not multi-millions of dollars, right? So there are opportunities to find those that can be really attractive as well. Obviously, it would be loans through us on the initial acquisition, rehab, bridge side of things, the 6, 9, or 12 months. After that, you're generally going to go probably with a bank on the exit with that, which we help our clients with as well for that long-term financing. But that's an interesting play on not just the residential side and sort of being open, welcome, and sort of attracted to, hey, you know what? I don't mind that retail and restaurant side. I don't know about you, by where you are, you're like in the farm country of I don't know where, but
The bustling
on
town
the
of
farm,
Enumclaw,
literally,
Washington.
literally on the farm. Right, exactly. But
Literally
but
the
but in
farm.
reality, you I was talking to someone about this the other day too. Restaurants seem crowded everywhere,
They
right?
are.
Like
They are.
I don't care where you go. It's not, Manhattan, fine, whatever. It doesn't matter where you go. It seems like restaurants are just crowded. They're just
They
busy.
are.
Uh, it's just a thing. I'm saying this just completely anecdotally. I don't even have the data in front of me from, I'm sure there's reports about it, but it just seems that way. And so I think that is driving people to consider those kinds of options of being like, hey,
Mhm.
that could be pretty neat as an investment opportunity. And I think that's a nice diversification play. You want to diversify in your entire portfolio and within your real estate portfolio, I think it's a smart idea to be diversified there too. Maybe you have some subsidized Section 8 type rentals, non-Section 8 type rentals. Maybe you have, again, I'm not saying you're running a senior or mental health facility, but you are the landlord that is then leasing it to the person who's running and managing that. Maybe some mixed use, maybe a small retail strip center, the nail salon, the coffee shop, the Dunkin' Donuts, whatever it might be. So interesting opportunities to have a diversity of assets within your real estate portfolio to, again, offset the ups and downs of the marketplace and ensure that your cash flow should be coming to you. I don't want to say regardless of anything else going on, but it can offset some of the negatives that might happen. So hey, there was a little hit in retail, or the restaurants are slowing down a little bit. I've got some residential, or vice versa, but not being too heavy in any one niche, I think is really nice and attractive way to do things.
Yeah. So typical Josh and Jessica fashion, we've just covered like a lot of ground. I will say this,
Right.
we've been Trius, we've been incredibly busy. It's been a crazy,
Yep.
even just most recent couple weeks. Always grateful, both on the borrower side, which everybody, if
Yep.
anybody knows my personal story, that's where I started. I was a borrower, and then on the investor side, which also I guess I'm an investor as well. But
Right. Right.
so yeah, so super busy. I guess my question to you is, as it relates to everything we just covered, which I know is a lot, what are you most excited about? What are you seeing,
Yeah.
and what are your kind of final
I'll
thoughts?
yeah. Yeah. No, I love it. Sort of final thoughts. I would say, don't be fooled or intimidated by the timing of the end of the year. Conversely, use it as an opportunity. We're in the fourth quarter, right? Which is absolutely crazy to think about. I cannot even
Mhm.
like, as I'm saying it, I'm saying, are we really? Like, I had to like think for a second. We are in the fourth quarter of the year. Thanksgiving
Yeah.
is, I don't know, 4 weeks away or something, right? Christmas is 8 weeks away. It's crazy. But what's happened for as long as I've been in mortgage real estate finance, the end of the year I hear every time, and I actually heard it recently with someone I was talking to. They were like, "We're getting to the end. It's sort of like slow down time, opposite, right?
Right.
Go against the stream, go upstream, go against the crowds here. It's
Right.
opportunity. right? It's opportunity. Don't be fooled by thinking it's not. Take the other approach and say, you know what? Now is when I want to buy something. As crazy as it sounds, to close
Yeah.
on buying a place in mid-December, a week before Christmas,
Best
that
deals.
works. We do a
Yeah.
lot of business then, right? That
Hmm.
person selling it, they're counting their dollars for Christmas and for trips and for vacations and for their new year. There's
People
tax
aren't coming to visit
consequences.
their
That's why a
property.
lot of
They're
people
going
are
to
doing
holiday
it.
parties. You are their one
100%.
tour. Yep.
So take advantage of the busyness of the world and
Hmm.
the marketplace to say, wait a second, they're all distracted. All right. They're
Yep.
all looking here and looking
Yeah.
there. I'm going to hone in. And now's when I'm going to dig deep and find a real estate opportunity. Now's when I'm going to buy a property. And you're saying it to, I'm thinking as I would say it to a spouse or a friend to be like, what? Now you're shopping for real estate in November, December? Yes,
Yes,
that's
I am.
exactly what I'm going to do. So that would
Yeah.
be my
Yep.
passing, my sort of ending advice would be like, go against the grain, see this as opportunity. That's thinking outside the box like that, I think, is where our most successful investors are most
Hmm.
successful. Is not following the crowds and trying to pivot and take a far left or far right turn to be like, I'm going to do what everyone's not necessarily doing. And for us as a business, the fourth quarter has always been a tremendous time of the year for us because of those same reasons. And because a lot of it is a mental mindset, right? Everything in life's a mindset, right? So the mental
Hmm.
mindset of like giving up the end of the year, just relaxing, sit on your laurels, so to speak, right? No pun
Right.
intended, chill out, relax. And no, it's the opposite. Now's the time to crank it up for year end. Take that race to the finish line. Fine. Chill out
Yep.
Christmas Eve and maybe take that to the new year. But other than that, there's real tremendous opportunity. So that's what I would say would be my parting words for everyone.
It's go time. I love it. I couldn't agree more. I know we're wrapping it down. We did get one just real quick question. The question was, do we lend to LLCs or just individual investors as borrowers?
Yeah. So the easy answer is just LLCs. Complicated answer is, but we make exceptions, right? So I would say 95% of our loans are made to LLCs. We prefer to make to LLCs. That's the right way to do it per investment property guidelines, our attorney's advice, all that kind of stuff. So that's the smarter, best way to do it. I would advise people to do it in an LLC as well. Having said that, sort of the little asterisks I would put up there is there are exceptions that sometimes make sense. And if we think it makes sense, and we've talked to the borrower and try to explain to them that we still think an LLC is a better idea, but they want to, for certain reasons and certain circumstances, do a personal loan. We have done them. We will do them. So it is not out of the question, is the long and short of it.
Awesome.
Yeah.
Thank you. Yeah, I mean,
Perfect.
I think,
Excellent.
yeah, as usual, we filled up 30 minutes pretty easily. I mean, thanks to
We
everybody
always do.
that was attending. We always
Yeah.
do it.
Thank you
Um,
all.
I couldn't agree more. Super excited, especially as we come to the end of the year and we're busy. We're lending and we're taking investor
Yep.
funds.
No
Yep.
doubt. No doubt. Call us on both fronts.
Perfect.
All right. Well, thanks for
All right.
tuning in. Thanks for watching. We appreciate you taking the time. See you next time.